Richard, welcome and thanks for joining us here.
Greg, thank you so much for having me on. Hello to you and hello to all your listeners out there.
Well, if it's not obvious already from the background, I should say that you're joining us from Shanghai. And the reason I've got you on is I come across your book a month or so ago called Cashless, China's Digital Currency Revolution. I thought it was a fascinating book, and there were so many insights in there that I just wasn't aware of in terms of the development of the Chinese digital economy and how many years ahead of the West they are. So I think, one of the things I'm really looking forward to in this conversation today is trying to explore what that payment system is like and what we can expect here in Australia and Western financial markets in years to come with central bank digital currencies. But before we get into that, perhaps you could just give listeners a brief background of how you came to write this book. Because from my perspective, I looked around, there's not many books out here like this.
No, there aren't. And look, you really hit the most important point that I want to make to anybody out there who's saying, well, this is China, it's not relevant to me. What happens in China stays in China. I get that. But what is happening in China is that people have a new relationship with their money. And that new relationship was brought by digital payment. And that relationship is something that all of the West is going to have. So if you want to see the future today for Australia, if you want to see the future for the US, EU, look to China today, because that's coming. It's not there now, but it will be someday. And, so how did I get into this? That's really the question you started with. And
yep.
For me, I was an investment banker for 18 years. I worked on trading floors where I was a math guy. I was the head of multiple trading teams, and they were always the same sort of formula: a legal guy, an accounting guy, some coders, and usually a mathematician or so. And I am a mathematician who can explain stuff in a nice, easy way for people to understand. And that's how I make my living. Yeah, it's really funny. I made my business doing that for 18 years because a lot of the people who are very technically oriented and arguably understand the products better than me couldn't necessarily explain stuff to clients in a clear and concise way. And I hope your listeners get a clear and concise explanation of central bank digital currency, or what I often call CBDC. I hope they get a nice, clear and concise explanation today.
Well, let's start at the beginning. And before we get to the discussion on the CBDCs, I think it's important to understand the reason why China is much more advanced than the West on this. And that's because of the digital payment system that already exists in China today. And you spend a fair bit of time in your book going through this and laying out the infrastructure or the architecture of how the Chinese digital payment system works. Could you maybe give listeners just a brief idea of how that is compared to, say, the West?
Sure. And that's really critical. So really, my book is divided into sort of three sections, and it's digital payment, what I call version 1.0 digital payment. And that includes the two main companies that everybody or many people have heard of. And they are WeChat, which is owned by Tencent, and they have a product called WeChat Pay. And the other one is owned by Alibaba, and that payment system is called Alipay. Actually, I should say it's owned now by Ant Group, a subsidiary company that was spun off of Alibaba. But these are the equivalents, just so we have context. Tencent is the equivalent of a Facebook or Twitter rolled into one in China, and Alibaba is really the equivalent of Amazon. It's the sales platform. So those are what I call version 1.0, and they started to offer mobile payment in China in the year 2014. Alipay started a little bit earlier, offering online payment for buying stuff, because they do e-commerce. But 2014 was a big year. And the reason why it was a big year was because both of these payment platforms launched, but also because it was the year that the Chinese government issued the first private banking licenses. And the 4 of the 5 licenses went to Tencent, which is a WeChat, 10 cents WeChat, which is the equivalent of Twitter, Facebook, Alibaba, the equivalent of Amazon, Baidu, which is the equivalent of a search engine. It's a Google kind of equivalent. And then the 4th one went to a place that most people may not know. It's Suning Electronics Store, which is big in China. It's their biggest chain for buying electronics. But what's significant is that, just imagine for a second that Google, Facebook, and Amazon got banking licenses in whatever country you're living in, and they would fundamentally change how payments work. And we can get into the whys in a second, but that's fundamentally what happened. And those are what I call version 1.0 payment. And now China is taking the next step to go to version 2.0, which is central bank digital currency.
Now, just so people do have a clearer understanding of this, what digital payment 1.0 means, effectively, it has speeded up the cashlessness, I guess you could say, of the Chinese economy. Now, you're saying you've lived in Shanghai for 10 years, and you're saying, well, you've written that you very rarely use cash anymore. And most people, that's the experience of a lot of people. They will just go to a shop, they'll go to a restaurant, they'll pay with a QR code, and it's all done digitally. And more importantly, with less and less friction. So the payment transaction costs are going down. And that's one of the main differentiators of when you bring tech companies into the payment system, right? It creates competition and forces prices down. Is that a fair way to describe it?
Absolutely perfect. Perfect explanation. So let's start with the first part of that, which is cashless. That's the name of my book, and that is my life. Most people who live in major cities in China don't bother carrying cash around. We use either of these payment apps, and both of them have, as you correctly pointed out, QR codes. And these QR codes are scanned. And they have biometric, to open them up, you need to scan your face to open them, so they have security. And what they allow us to do is to essentially pay for stuff easily. And the key thing to really understand is that payment is free. So for me to pay somebody else, it costs nothing. And that's really a big deal. Ask anybody who owns a coffee shop anywhere on the planet, and they take Visa or MasterCard, and they have to pay a vendor's fee to Visa for every time you use the card. It's hidden. And in fact, it's really kind of funny. It's a hidden tax that we have for electronic payment in the West that most people we just used to it and we forget about it. So all of that true. QR codes, I'm cashless, and yes, the big one, payment is free.
So payment's free. What do the tech companies get out of it? I guess it's data, right? They have the ability to collect your data and your habits and be able to do things with that. Is that the trade-off?
Absolutely. So the trade-off changed a little bit as the systems evolved, but essentially, what WeChat and Alipay get out of it is float, as bankers call it, float of your money. So there's times when your money's at rest and it's sitting in a big pool. Traditionally, in the early days, they made interest on that. Eventually, the Central Bank of China required that they sweep that money into an overnight account, which is what banks do. But they have data, which is clearly something that everybody's used to. We all use Google and Facebook, which are free. We know that they take our data. So yes, definitely, both of the payment companies get that. They have a financial incentives, somewhat like banks, to have the float on your money, and they get to operate because of the data. Because they have these payment platforms. They basically operate what I call a 360-degree lifestyle platform, where it's not just about payment. You see, we're used to thinking about Visa and MasterCard, either swipe or tap, right? And you're done. Well, these companies both have platforms, so you can invest money, you can do your banking, you can buy your groceries. I mean, your life is handled on these platforms, so it's much more expansive. And this is hard for many in the West to wrap their heads around, is that these platforms are complete lifestyle encompassing entities. Really very, very powerful.
Yeah, I think you called them super apps in the book, and essentially you can do everything on the one app. Whereas I guess what we're more used to is having to go in and out of different apps to do different things. I want to ask you whether you think the oligopoly of the Western banking system is an impediment to having this type of payment system rolled out in the West. And what you said earlier on was that the Chinese government gave banking licenses to tech companies. Now, I might be being cynical here, but I would say that the banking lobby has a very, very powerful vested interest in that not happening in the West.
Oh, you're not being cynical in the least.
I said that tongue in cheek.
I love it. No, that's not cynical. That's true. So when I talk about biased banking licenses, I usually say the following. So should the People's Bank of China gave or allowed the Amazon equivalent Alibaba and the Facebook equivalent WeChat to have these banking licenses. And they did so at the expense of their own state-owned banks. Remember, banks are state-owned in China. So think about for a moment, and I'll use the U.S. Federal Reserve as an example because it's just the easiest. Just imagine the U.S. Federal Reserve saying, okay, we're going to give banking licenses to Amazon and Google, and, major banks, you're going to have to take a hit on some of the loss here, but that's for you to worry about. Inconceivable that would happen in Australia, Europe, London. It's hard to imagine that. And yes, much of our fintech universe is very tightly regulated by banking laws that are heavily impacted, heavily influenced by bank lobbying groups who don't want change. And I don't think that that might have been a subversive statement 10 years ago. But I don't think that's a subversive or controversial statement anymore. It's pretty much accepted obvious in the business.
Exactly. So maybe we'll get back to how banks are going to coexist in this world of digital payment platforms 1.0 and 2.0. But let's just move on now to, we've sort of set the scene for the Chinese digital economy. And obviously that has created an architecture that allows a central bank to create a digital currency. Now, there's a lot of technicalities that we could talk about with how the CBDC is being designed and set up, but maybe we could just give a more broader view. And if you could explain what is it and how that CBDC or how China's central bank digital currency will interact with the existing payment system. What changes could people expect from that?
Sure. Okay, so the issue here is people have two absolutely wonderful ways to pay for stuff. You can pick one app or you can pick the other app. We call them walled gardens because each one doesn't talk to the other, although that is changing with new antitrust regulations in China, and everybody knows that China, as of late, has had a lot of new internet laws. So that's starting to change literally within the last couple of months. So we've got two wonderful options. Why a third, and what does the third buy us? And it's very common for people to have read, if they know anything about this, they may have read somewhere, well, the PBOC, or the People's Bank of China, the central bank, is releasing its central bank digital currency to kill off and to damage these other two apps. They don't like them. And that's not entirely true. What the first two have done, version 1.0, WeChat and Alipay, have substantially made China cashless. They have given a real GDP boost to China, which is measurable. And they've done something that's really important. When I talked about them getting banking licenses, it was partially done to enhance financial inclusion within China's rural poor. We have 1.4 billion people. You cannot build enough what we call brick and mortar bank branches to reach them all. And frankly, digital was seen as a way to bring greater financial inclusion. Wonderful. It all worked perfectly. Now, the question is not, well, what do we do? The question is, where do we go from here? And how do we take that digitization even more deeply into society? So it's not taking from Alipay and WeChat paying, saying that's all there is, and we're going to take from your market, right? That's zero sum. There's a pie. It's this big. That's as big as the pie is ever going to be, and we're going to take some from you. What it's saying is something fundamentally different. We're going to build a digital society. That digital society needs digital cash. And we're going to make that digital cash go even deeper and make that pie much, much bigger. And that's what CBDC is all about. Digital societies need digital cash.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.